Yo, what is good? I'm gonna get trading view loaded up real quick. I was having some difficulties. Um, but today we're gonna be talking about the exact confirmations that I look for in the market when I am buying and selling. It's the same for both of them. It's a pretty easy system, to be honest. Um, don't associate yo, what's good, Jake? Don't associate trading with difficulty because once you learn how the market works and the algorithm that runs every single market, you can apply the same concepts to the stock market. At these points, they're like beyond concepts because they do work. And I'm also going to show you something. I was prior to um, I was testing this and with some different things and back testing this on the paper trading account. That's what I like to do. I like to back test on paper trading accounts. Um, things that are going to be um, things that are going to be beneficial to my trading. I like to back test on paper trading account, and then once I see it, if it does it add to my accuracy rate, does it take away from my accuracy rate? Um, does it add to my accuracy rate when I do limit orders, or does it take away? Um, is it better when I do market executions? That's going to be the thing that's going to be the best optimal thing. And from what I've seen, it is better for me personally to do market executions just because you get to see the close of the actual candles, um, the close of the actual candles happening. For example, if I saw, continuation from an order block, like example, these two or three candles closing, and I saw a price start the trade below, right? Then I'm going to likely get into the trade at some point. You get the market execution, and you will be able to, basically follow price down. As long as you have the liquidity to take happen. So, getting to the lesson real quick. NZD CAD was one that I was looking at. Um, let's find a pair. This is kind of like off. Sure, this will work. Um, Australian dollar, New Zealand dollar has been bearish. So we're gonna see if we had a daily, or this is not the one that had the buy side liquidity take that I wanted. I think this was the one that did. AUD USD. Obviously, it's not a very volatile day, but this is one I was looking at today. I didn't end up taking any trades today, if I remember right. Um, this is when I was looking at. I knew it was going to trade above this high. Basically, Asian range had been taken right here. So essentially, long story short, I was looking, and this is not the right. Couldn't close that. I was looking at possibly this fair value gap, that was right here to get in. So, well, let me see. I was looking at this 1H fair value gap as a potential, or maybe even the one above it. I didn't think it was going to come back up, and not this far at least. Since this fair value gap was in premium territory, I knew it was going to be one of the two, but I was just basically going to watch, candle closes around both fair value gaps. If it violated this one and traded into this one, then I basically use a process of elimination. You know what I mean? If I am wrong, then that's the purpose of waiting for the candles to close that because obviously if it keeps breaking structure and taking buy side, then likely it's going to be coming up to the other fair value gap. And some things that I look for when I'm short, for example, are after I have my daily time frame, kind of draw on liquidity for my higher time frame context. And obviously, right here you can see that the daily time frame on Australian dollar, US dollar, dropped down, took a bunch of sell side right here, even took major sell side right here, and then eventually started to retrace back up to take major buy side because it's the next thing that they have to do. So I did mark that up. I noticed that this daily imbalance was filled. Fair value gap, whatever you want to call it, was filled, and then the bearish order block closed on the daily after that. So that's kind of what my context was. And then they traded below this daily low right here, this swing low right here on this daily candle. So that shows that they're chasing sell side liquidity. And it was a pretty easy trade. Drop it in the chat box if you get that. I didn't take it, but this is a pretty easy setup. Just from a daily point of view, obviously know the draw on liquidity is going to be all of these lows right here. Drop it in the chat box if you get that. So you can see the setup, obviously. I dropped down to the 1H from there. And I was like, okay, well, I'll wait for a buy side liquidity take. Didn't notice the imbalances here. Initially, I believe it was this one that I was initially looking at. for the imbalance that I was going to use for the trade, because I looked and it was the first one that was in premium territory, and it was the first one above the liquidity. And from the looks of it, it wasn't a very volatile day because it was Friday. Price did start to kind of come down from that. So we have I dropped down from there to the 15-minute, my bad, the 5-minute time frame, after I got the liquidity take and it made it into the imbalance. And I look for a few things once I'm on my entry time frame, and it's kind of filters out any manipulation that could happen. I would say with the 90% high probability of like you've waited for all of the manipulation to happen before the actual move down, right? So in this case, these are called displacements, right? And basically is when price makes an energetic move up that takes liquidity, right? So in the case of a short specifically, you're going to have a displacement high, and you can draw it in one of two ways. You can draw it in on this wick right here, because what you're doing is you're waiting for I'll use some white space at first. Let's find some white space. This will be easier, and then I'll show you on the chart. You're gonna look for price to, right, take that buy side liquidity, right, rally up like that and make a high, and then price is going to trade above that. So on your entry time frame, you want price to rally up, make a high, make a low, basically taking some sell side right here in this area. I'm gonna turn that a different color so it represents like sell side liquidity, maybe like red or something like that, and make it a little thicker. Exactly, like an impulse move up. So you want, and this is specifically for shorts, this exact pattern you're gonna see, and the confirmations that I personally look for when I'm going short, right? And I'll cover that long as well. You want price to rally up, make a high, right? Make a low, and then take out that high. There's a buy side liquidity take prior to the short that you need. So that's called a displacement high. And what you're going to do with that, and you can either draw it on the actual high that it took out, or if you wanted to, and I'll show you on the chart too what it looks like, you can put it on the high right here. I personally like to put it on the high right here because it shows exactly where price drove through to take the liquidity. If that's what you prefer to do, that's fine, but you can do it either way. You can put the displacement higher here, or you can put it where the displacement actually ended. Like I said, I personally like to have it here. And then what you want after that, right? That's confirmation number one. You want price to trade below a short-term low. So basically, price will give you liquidity shift confirmations, right? Let's just say it made a low. You want a displacement lower right here. And that's what a displacement lower is called. So basically, you want to rally up, make a high, make a low, take out that short-term high. Once it does, you want to make a low again, make a high, and then take out that short-term low. The second it takes out that short-term low, it's confirming and it's called displacement lower, and I usually mark that up right there. It's showing you its hand, it's tipping its hand to you in terms of the short. It's showing you we're done chasing buy side liquidity, right? Now we're chasing sell side, right? Because it just took sell side, right? So that's the market tipping in its hand to you, and that's the algorithm showing you, hey, it's time to go short. Drop it on the chat box if you get that, because they're not going to take sell side until they show you that they're taking sell side. Prior to that, they were not taking any sell side. They were straight coming for buy side. And obviously, you're going to have 1H higher time frame context in terms of, my bad, let me minimize that. You're going to have 1H higher time frame context in terms of actual confirmations for your higher time frame liquidity. You have a daily time frame draw on liquidity. So you have a lot of liquidity, higher time frame context, basically gauging order flow, right? So once you have those confirmations, right? Like I said, you can put it here or you can put it here, right? The displacement higher, it doesn't really matter. Once you have those, right? This is your confirmation that they are going short. I just type it in. I thought I saved the template. Confirmation spell today. And if my mouse doesn't want to click itself. So confirmation that the banks are for sure short. I usually keep these pretty small at about 10, just so they don't take up too much room. So that's a confirmation right there that banks are for sure going short, right? So at that point, you're like, okay, bet. What do I do after that, right? I got all my confirmations. We had a displacement higher, here. And let me change that to what I actually prefer it to be. We got displacement higher here. We got a displacement lower here. I'm taking this liquidity, showing the market tip in his hand to you. What do I do now, right? You're going to be like, okay, in between the displacement higher and the displacement lower, you're going to look on your entry time frame, whether that be the 5 minute, the 15 minute, doesn't really matter whether you like to enter on the 1 minute, right? You're going to see if there's going to be a fair value gap, right? If you don't see a fair value gap on the 15 minute or the 5 minute, or like let's just say you want to enter on the 15 minute, right? If you don't have a fair value gap on the 15 minute, drop down to the 5 minute. Is there a fair value gap? Yes or no? If the answer is yes, draw it in, right? That's going to be a lower time frame fair value gap you're going to refer to. If there's not a fair value gap on the 5 minute, you're going to drop down to the 4, 3, 2, all the way down to the 1 minute if you need to, right? And then if you don't find a fair value gap within the displacement higher and the displacement lower, basically the energetic impulse move down that took sell side and confirmed that they were actually going short, you don't have a trade. These are the confirmations that you're looking for in order to go short. Displacement higher, displacement lower, right? Buy side has been taken, sell side to filter out the manipulation. They've manipulated before the move, so you have that in check. And then you have the confirmation that they actually are going short via them taking sell side now. Now, at this point, all you have to do is watch price action around the fair value gap and wait for anticipated return to that fair value gap. And this is where I like to have price action in my favor. If I'm entering on the 5 minute, I'll go down to the 1 minute. Like let's just say I found my fair value gap on the 5 minute time frame, right? Drew it in. I'll go down to the 1 minute and look at what the 1 minute is doing inside of that 5 minute fair value gap. If I see the 1 minute taking out sell side constantly, and I'm trying to go short, right? If I see the 1 minute come up to the fair value gap and then start doing this inside of that 5 minute candle more than a few times, taking sell side repeatedly, right? I'm going to do a market execution short. You can just compare the two. Like, okay, 5 minute, boom, the 1 minute's making a new low. The 1 minute took some more sell side. You can have a rule where you're like, I'm going to have it take sell side twice on the 1 minute, trading below swing lows a couple of times before I enter on the 5 minute. And then you can see that they're chasing sell side, right? That's called micros. Basically, you're looking on the lower time frames because the lower time frames are going to be ahead of your entry time frame. If you're entering on the 15 minute, the 1 minute is going to show you sell confirmations on the 1 minute before the 15 minute ever does. Drop a one in the chat box if that makes sense. Your micros are going to come in first, basically, and your micros are your lowest time frames you can look at. But you'll have confirmation on the 1 minute, the 2 minute, the 3 minute to enter on the 5 minute, the 15 minute, the 30 minute, right? Well before you see any confirmations on your actual entry time frame. So you got to look at your micros first while inside of your institutional footprint after you've gotten your stuff, your confirmations. You wait for it to come back up in there. Once it comes back up into the fair value gap, right? You're gonna look at, even lower time frame, right? If I'm entering on a 15 minute, I'm looking at the 5 minute, I'm looking at the 1 minute or 3 minute or 2 minute, whatever the case may be, for kind of consistent sell side liquidity takes, right? Boom. Failing to make new highs, things like that, right? Once you have bearish price action and it for sure going down in the 1 minute, we can use 1 minute order blocks, all of that inside of this fair value gap. Once you have confirmations that prices exactly, yep. Once you have confirmations, that's it. Market execution, sell short. Maybe stop loss just behind the where the displacement high happened. That's because that's going to be a strong high at that point, and then you can incorporate strong highs. Nice. And then you can incorporate strong highs into that and everything. So let's go to the 5 minute real quick and look at AU real quick. So this would be the displacement higher, in my opinion, pretty easy. Displacement high right here. This is the same setup. You can see the swing high that it traded above. Drop it in the chat box if you get that and can see that. That's the displacement high right there. That's what I mean. I don't mean little small moves like this. I mean the actual swing high. That's where the buy side liquidity is going to be resting every time. So You guys said you can put that there, or you can put that there. It doesn't really matter. I prefer to have it there because it shows me actually where it drove higher and took the liquidity. It's just a better reference point for me. Sometimes it can get a little bit jumbly if you do your displacement lower right here, and sometimes you do have to put it up here, but it really doesn't matter. It's really all up to your personal preference. It all means the same thing. Sometimes I will put it here if the displacement higher and the displacement lower run together, for just kind of to keep my charts clean. So in this case, I'm going to keep it up here because the displacement lower did happen right here. You duplicate this real quick, and this little trading view shortcut, if you hold Control or Command and drag it with your mouse, it'll just keep duplicating over and over again. So it's a little shortcut, so you don't have to grab stuff over and over again, and then you can just change the template. Displacement lower right here. And when I say displacement lower, right, I'm going to fix this. I mean, that's the confirmation they're going to be using to see, like, is this currently chasing sell side, right? What's chasing buy side all this time? Is it currently chasing sell side? After the displacement lower, and that's just right there, I'm going to do the same thing. No problem, bro. For sure, chasing sell side now. That's your confirmation because they just showed you. There's literally nothing else to it. They just showed you before they weren't chasing sell side, they were chasing buy side. They got a displacement higher, boom, confirmation. There's your buy side liquidity you take before the sell. Your rule, you must have your buy side liquidity you take before the sell. So here, there it is right there on the displacement higher. After that, you either get a confirmation that they're actually chasing sell side now because you're going short. Displacement lower, right? Happened right here when these wicks traded above. Really, when the first candle trades below a swing low, which in this case would have been right here. Price didn't quite trade below on that candle, so even more. Didn't quite trade below on this candle right here. Tried to, and then on this candle, it actually closed below. Boom, there's your confirmation right there that they're actually chasing sell side. So let's just say you wanted to enter on a 15-minute, there's no fair value gap. Well, there wasn't one on now, but is there a fair value gap? No. Let's go down to the 5-minute. Is there a fair value gap? Yep. Let's draw that in. The first time frame that you find the fair value gap on, you're going to draw that in. The first lower time frame from your entry one, right? If you don't have one on your entry one. If you do, great, draw it in there, right? So let's go fair value gap. And we could change that color because I don't want blue running in with blue. So let's make it like that color or something like that, even though it's kind of ugly. Let's try this one. That'll work. But yeah, the fair value gap, right? And that's when you have your pattern, right? That's when you have your pattern. Is it going to trade inside fair value gap? And are you going to have a continuation from that? Let's go down to the 1 minute and see what happened inside of that 5-minute fair value gap. So you had obviously the 1 minute trading into there. Price then traded below on the 1 minute right here on this candle and took some more sell side on the swing low on the 1 minute, right? Came all the way down, even took out this low. At that point, price is for sure coming back. Next thing that I have to do is take buy side. What's above where price was when it was right here? Here's a swing high. Price came up, filled it again, took out a swing high. And then you go back up to the 5-minute and you can see, I'll get out of here. You can see the price action reflected as a wick. And then you go back to the 5-minute, you look at price action, it starts sinking. And you have that confluence and context on the 1 minute that since it was trading below and showing you the sell side liquidity takes here on this swing low, and even here on this wick, which is a swing low. Once price came back up, took the buy side right here on the 1 minute, you could go back up on the 5-minute or 15-minute, whatever the case may be, and you would have had a sniper entry for a nice drop if there would have been enough time for the day. Drop one in the chat box if you get that. Too easy, right? That's all I look for after the buy side liquidity take, right? That's literally all I look for. Displacement higher, displacement lower. Is there a fair value gap between the displacement higher and lower? Yes or no? Drop time frames all the way down to the 1 minute. Do I have any fair value gap? If so, yes, there's a institutional footprint. All you have to do is execute on what you see after the price action, tips its hand to you. And typically, if you're entering on the 5-minute, 15-minute, it doesn't matter. I drop down to the 1 minute because it'll literally show you, yes, we are still continuing chase sell side. Let me delete this fair value gap real quick just for the sake of the example. It's showing you trade below, trade below. That's 2 times right there. It's just taking sell side continuously. Boom. Once it's done, it's going to have to take some buy side. What's above the buy side? It just sets you up right there. Here's a swing high right here. It took it. Continuation. That's it. Once you know it's chasing sell side, you could have waited till it traded below this wick right here. Boom. There's the confirmation. Hop back up to the 15-minute. Market execution for a sell. Price would have tanked. You have higher time frame context. You have draw liquidity context. You have all of that, right? So let's find something that's been bullish. Gold's been bullish for some time, and do a bullish example real quick. These are the confirmations that I look for in the market when I am actually getting ready to buy and sell. Let's find an opportunity where gold was reversing. Let's just say right here. I'm gonna mark this up. In this area, we're going reverse. I took some sell side. Let's go down to. Well, it's the opposite, obviously, for buys. You're gonna wait for a major sell side or a sell side liquidity take, price to trade below an old low. In terms of Asian range and things like that, you can use Asian range. I'm gonna use this area. Just a cleaner trade happened here than over there. And you can see they took Asian range, took out this low right here, and then had a continuation of the trend from there. So, it's the opposite for longs. You're gonna wait for a price to take out a short-term low. Sell side liquidity, right? And you can look for a daily draw on buy side liquidity as well. Obviously, they're gonna be chasing highs if it's buying. So you're gonna look for where price is going to go next based on what it did last, right? The setup might not be ready. It might have taken the opposite liquidity and be going the opposite way for now. And that's fine. Sometimes you have to wait for order flow to shift in your direction for the trade in order for you to get into it, right? So, and that's where the patience comes from in trading. Sometimes it takes a day or two for the hourly or the 4-hour to set up in order for you to get in on the 15-minute, and that's fine. But it's all about you rewarding what you're getting when you do get into that trade, right? How much do you want to do a month? You want to do 15 or 20% a month? That's a really, really, really good return. So you could structure your trading so that you take a couple 5-minute or 15-minute trades a month. You know what I mean? At 7% gain a piece maybe, and just have high RRs and tight stop losses once your entries get really good. So you can see right here that they obviously took sell side, and I'm going to duplicate this. Likely inside of this H1 bearish candle is going to be an order block of some type. So we're going to drop time frames and see about that. Let me zoom out a little bit. So usually if you have a rejection and there's no actual formal order block, you can start to drop time frames and see imbalances and things. You can see on the 15 minutes, this is inside of that bearish candle. There obviously is an imbalance right here on the 15-minute. So you could have used that to actually get in after that. So you can see, let's just use the 15. We'll use a 5-minute. That's fine. Zoom out a little bit more. Gotta find the area again. So you can see right here that let's just say the 5-minute. You can also drop time frames to fine tune your fair value gaps too. I encourage that as well. It creates more precision. So there's that same fair value gap just fine tuned to the 5-minute. Drop a one in the chat box if you get that, and you can see the fill and the continuation from there. So it took some sell side, right? You're gonna wait for our short term low on the 1H to you're gonna wait for a short term low on the 1H to be taken out, and then you can see that happened. And price had a continuation from there, to say the least. This was a perfect entry. This was literally the best entry you could have possibly gotten. If you would have even set your imbalance at the 50% aggressive entry, it doesn't really matter. You would have gotten a sniper entry either way. What you're going to do is, give me one more. I'll edit that out. That's fine. Like I did the last video, it's just got a lot of kids, man. Displacement lower is going to be when price comes down and takes this sell side. Hey, Bria, can you play with the brother? Thank you. Jesus. Displacement lower is going to be when the sell side gets taken right here. So that's going to be a displacement lower. It's already happened at basically at the point where you see price kind of starting to reverse. Obviously, at some point, it's going to actually plateau and then price action is going to show bullish, right? And you won't have any more really bearish candles at that point, right? After the sell side liquidity taken away for price to obviously start buying up towards this high, right? That's showing you that they're getting ready to try to start chasing the buy side. Drop one in the chat box if you get that. You can see where price came down and actually has to stop somewhere in order to come back up and take out a high. They just got done taking sell side too, right here on your left. So that's where your context is for the long. Also, if you remember the strong highs and strong lows lesson, this would be a strong low. Shouldn't get violated. Just got done taking major sell side. You can mark this up as a displacement lower. And normally, like I said, in this case, sometimes you can put it on the low right here, and so you can actually see. But in this case, just put it on the low, and you can mark up the sell side like normal if you wanted to, and just put displacement lower right here. So that's a displacement lower, and I'll zoom back in a second. I just have to get that on there, and that's where the first confirmation you're gonna look for. After that, you're like bet, still waiting, and you're gonna look for a displacement higher next. A displacement higher is classified as trading above a major high, right? So in this case, I would say this right here on this big high right here, swing high is going to be the displacement higher. Let me duplicate this. Displacement higher. All right, so I'm on the 5 minute. Is there a fair value gap between the displacement higher and displacement lower? Yes, already on the 5 minute. If I wanted to enter here, I could have, right? When I'm down to the 5 minute, you can see the imbalance. All you're waiting on, let's go down to 1 minute to see what happened there. All you're waiting on is a drive into your imbalance, right? You already have context. Drive into your imbalance. I don't know if I'm gonna be able to find this. Mark it up. That's what sucks about dropping time frames. As soon as you do, you lose everything. It's all good. Let's go down to the 2 minute. Let's try that one. Oh, come on. Zoom out. All right, here it is. All right, perfect. That's fine. So you're gonna see if in this case it did not get actually drove into, but normally, and it does, like I said, sometimes the setup will fail you. You'll always obviously have the setup, but the setup will fail you. You want a drive into the imbalance, and then once you have that, you want obviously bullish price action. You know, you want to reject multiple rejections. You know what I mean? Things that are obvious rejections happening, maybe bullish order block closing, and then maybe breaks the structure. Maybe seeing that price is trading above a high, a swing high on the 1 minute, 3 minute, whatever time frame you want to drop to. Once it's in there, and then you can feel safe doing a market execution, knowing that you just recently took sell side, right? Major sell side, knowing that you have a strong low here actually, after taking that major sell side, knowing that there's a fair value gap, which is a institutional footprint for a buy in that. And you have the context once again of a recent sell side take. So after that recent sell side take, what do they have to chase? Buy side. You're looking to go long to that. That's perfect. Displacement higher, or my bad, displacement lower first, and then displacement higher, trading above a major swing high. Once that happens, you look to see if there's a fair value gap. If there's a fair value gap on any lower time frame, you can feel very safe doing a market execution and putting your stop loss just behind the strong low. Drop one in the chat box if that makes sense. Because if you just gauge price action in general, you would have been able to get in, right? The fact that it took buy side right here for the displacement higher, I would have likely waited for maybe one more break of structure and got in at the order block. You see this order block right here? When in doubt, demand more price action. Remember that. When in doubt, demand more price action. If you didn't get this fair value gap set up, 9 times out of 10, if you wait for price to just, buy up, create a high, create a low, and then take some more buy side, showing you that it's still going up, then you can just, what happened here? Order block, deepest end discount territory relative to the impulse move got tapped into perfectly. Drop one in the chat box if you see that. You could have chose this one or this one. So if you're ever not sure, wait for more price action. Wait for another liquidity taking your direction. That's the best thing you can do. Whenever I'm not sure, I get stumped in the markets too. Sometimes I'm like, man, I'm not sure if this is going down from here. Well, the biggest thing you can do for yourself is wait for more price action, right? if I don't know, right? One or two things can happen. It's going to continue to take some more buy side, or it's going to continue to take some more sell side. Get out of here. It's going to continue to take some more buy side, or it's going to continue to take some more sell side. And if you're short, right, you're going to want to see maybe the 5 minute break structure again to the downside and take some more sell side liquidity. Maybe that's what you're going to want to see, like right here on the swing low, or this wick right here, or maybe this low right here. But as it's coming down, you can see swing low, it's taken out, it's taken out, this was taken out too, and so is this. So how many of these do you really need to see before you actually execute the trade? That's where the confidence has to come in, because you have context behind this. Drop a one in the chat box if you get that. This makes this an extremely high probability trade based on institutional order flow, the algorithm. This is how the algorithm runs, right? If you've seen that it recently took buy side, and you have that displacement higher, and then they showed their hand with the displacement lower, and as a bearish institutional footprint within that, and they just got done taking buy side, that's a no-brainer right there, honestly. Exactly. Get in as early as possible, right? You want those big, I mean, the market, the volatility, the new year is still here, so the volatility is just still returning to the markets. But like, here's a 5 minute time frame on gold. You can make money both ways. What just happened on gold? That's where look where my crosshairs are. Traded above, taking some buy side, made some equal highs right here. Look at the 1H. Someone could have taken this move on gold. The 1H recently traded above a swing high. Price has been dropping from there. Look at that. Someone could have caught that on the 5 minute just based off that. Is there displacement higher? Yeah, I'd say so. This was one impulse move by itself. So this is displacement higher. This is displacement lower for value gap. It was dug into a little bit, not quite, but you did have multiple structure breaks. You could have executed on order block. Price tanked. So that's how I get in on the moves early. You know what I mean? You can look at the 1 minute, see did it mitigate the fair value gap in the 1 minute? It's 5 minute fair value gap of any regard. Did it? Dig into it at all? I would say yeah, a little bit. See, crosshair just on the wick right here. You can see how many times the 1 minute dug into this fair value gap. We could have fine tuned it and still got in on the trade. 5 minute, 15 minute, doesn't matter. Same thing with the 4 hour. You can use these 1 minute, 5 minute, 15 minute time frame confirmations on the fair value gap and the displacements to get in on the 1 hour or the 4 hour or whatever you wanted to do. How you get really sniper injuries. So those are just an example. And you can see these markets are very minimal. It's not much on my chart. It's all you need. This is all you need to be profitable. Is to know how the algorithm works and then execute on what you see, right? What happened here? Buy side take, traded above these highs, sold off. Buy side take, started to sell off. Created some equal highs here, so they'll be taken out eventually because gold is overall bullish, but we're just having a retracement. So you could have traded the retracement right here if you wanted to. Just looking for these same confirmations. I don't know why I keep doing that. These same confirmations. There's even another imbalance right here. Broke structure. There's your confirmations. Another confirmation. Did price trade back up into it? Sure did. There's a second opportunity right here to get in. Drop it on the chat box if you can see that. It didn't trade into this imbalance, but it did show you that it's taking sell side again right here. Created another imbalance and then gave you another opportunity to get in. Boom, continuation. So that's how that works, right? I look for a displacement lower, displacement higher, or displacement higher, displacement lower after a buy side or sell side liquidity to take, depending on whether I'm long or short, with context of major sell side being taken, strong high, strong low, obviously, and things like that are in context. So obviously, I'm gonna look on like that 1H or maybe even the 4H to see if there's even a strong high or strong low. As you know, as has been explained to you, after buy side is taken into an institutional footprint, let's just say in a bearish trend, that's going to be a strong high. That's not going to be violated. So you can just draw that in also after your displacement lower for a long, that's a strong low right there. After your displacement higher for a for a short, that's a strong high right there. And you're gonna mark that up, and that's a very good protected stop loss. If you can manage to get in around the strong high area and then have your stop loss just behind the strong high, the probability of your stop loss getting tapped is very low, extremely low because of that. Drop one in the chat box if you get that. So when you're in the market, it doesn't matter what you're doing. If you just follow this current, like what I'm showing you right now, all you would have to do is repeat this every day for the rest of your life, because this happens on one setup or another every single day, back and forth, buy side, sell side, and you can literally just look for the same confirmations. Okay, buy side happens. Is there a displacement higher? Yep. Is there a displacement lower? Yep. Okay, let me execute on the trade. Boom, price dropped. So you know what I mean. Major sell side was taken, or a swing low. Is there another fair? Exactly. Is there another fair value gap for the bullish side of things? Okay, is there a displacement lower? Yep. Is there a displacement higher? Is there a fair value gap? And then you wait for price action to come back into that. And then you see like, okay, is price action looking very bullish from the fair value gap? Wait for some candle closes to happen, you know, and maybe even wait for another break of structure to the upside, taking some more buy side to show you his hand. And then the likely will be another fair value gap or another block within that impulse move if you can wait, right? That's some patience. And then you can get in on the buy side of things. And then let's just say you're pro trend on the short, right? Take some more, take some more buy side, and then this major swing high or something like that. And then you look for the same confirmations, rinse, wash, repeat, and then you can make money both ways in the market. You will lose sometimes, but like once you get down the flow of things, being able to make money on both sides of the market, and you know how liquidity runs and works, it becomes very easy and very flowy. You're like, okay, I'm just flowing with the market at this point, only reacting to what happens liquidity rise with context and executing on what I see. Drop it on the chat box if you get that. Perfect. So that was confirmations I look for. These are same thing. If you're looking on 4H, you want to, you know, same thing. If you're looking to go short, you want a displacement higher and then displacement lower. You want to trade below maybe an old wick or something like that, an old candle. And same thing with the hourly. You want to trade below swing highs and swing lows, major ones. You can see the swing high got violated. All liquidity is resting above the swing highs, not this little small swing high. Only count the major ones. So make sure you remember that. So obviously gold is coming for what? This swing low right here. Too easy. But it just got done doing, taking buy side. It's an opportunity short right here. Gold's overall bullish, by the way, so you still can make money both ways with that. If you guys have any questions, that's literally all I look for. Perfect. Your homework is going to be to basically go and look in the market for a long and short example. No problem. Go and look in the market for a long and short example, where you had a displacement lower, displacement higher for longs, and then the trade actually, you know, fair value gap, whatever. Doesn't matter if it's down to the 5 minute, 4 minute, 3 minute, 2 minute, 1 minute. Just find a fair value gap and then show me a trade example. Thanks, guys. For longs and shorts, like I said, this pattern happens after a major buy side take and major sell side take, as you can see. Make sure that you remember that. I mean, looking for it, you can use this video for reference. I will see you guys. I'm gonna try to go for a live tomorrow evening. But if not, I'll see you guys next week. So you guys can actually apply this as well in the markets and have time next week to do that. All right, I will see you guys later.